one of the big landmines, as you call it, that I always do try to encourage folks to do is to make sure that the life insurance policies that you have living benefits associated with them, right? Because oftentimes when we look at life insurance planning, it's often based around a person's income. Well, if there's one parent, let's say it's one parent that is providing care for the child to the extent that it's not feasible for them to be employed otherwise, well, there's no income there to base a life insurance assessment off of, and so you kind of have to think about that and adjust accordingly. Also, if that person is not employed, then they don't have disability insurance, right? But then what happens if they get hurt or if they get sick, right? And so, having the right amounts of coverage and, adding the living benefits piece is something that's a conversation I'm having a lot as well.
What kind of living benefits are you typically most importantly looking at? There's a lot of, I just think living benefits is a term that is so easily thrown around on social media today by the huge influx of insurance agents that are licensed, but maybe don't understand the complexities of advanced planning. And I feel like living benefits to me almost is a key word when I hear it. Oftentimes it's somebody, following it up with a sales pitch and not always doing the correct planning ahead of time. They're selling a benefit or selling a feature. They're not, doing planning and getting what's needed, and what's most appropriate. And, I know you well enough, Greg, to know that that's not you or your approach. But I want to maybe more definitively clarify or talk about like, what are the living benefits? Because there's so much misinformation around them, and this is such an important topic that you really want to make sure that you get the right riders and benefits. So that way, if you are choosing to put your money into some of these policies as a strategic part of your plan, you're getting the benefits that you do need, and they will be there, or hopefully will be there when you need them.
You're right. That term is can be used in a number of different ways. I'm really referring to there's different terms for it, but chronic and critical illness riders. So if God forbid cancer, heart disease, things like that, it covers and it allows you to access a portion of the death benefit. To help out with those kind of expenses. There's also straight disability insurance riders that you can get with some life insurance policy that will pay you, a certain amount, X amount per month for a period of time. So those can be added as well. And you mentioned something about social media and you see a lot of people that talk about all these different things you can do with life insurance policies. I always tell clients this, the first thing you need to be concerned with is the death benefit, right? Mm-hmm. Making sure you have enough insurance, right? I see a lot of people that will, was it this infinite banking stuff or be your own, whatever, that type of thing. Yeah, people that want to try to do that, and they're setting up these policies, and maybe want to overfund them. But when you look at the death benefit, you don't make it home tonight. What happens? How much does your family get? This amount. Okay, This is not enough. This is not enough. Okay?
I found that I found that if you use those policies for the death benefit too, they don't stand on their own. Especially in a case like this, right? So I'm thinking about if you're, if you're the primary breadwinner and you're trying to replace or put into place a life insurance policy to cover your debts, provide an emergency reserve or an emergency fund for your family, replace your income for the rest of your career, and provide for the added additional expense that your family has to incur as a result of having special needs loved ones that you want to provide for, right? That sometimes so easily stacks up to $2 to $3 million, easy, right?
Yeah,
easy. And the cost to get a permanent policy that would provide that amount of death benefit and be able to max fund it to where you can use it for one of these other concepts that people are talking about all the time, like, infinite banking or being your own bank. It is so draining on the liquidity for most people, right? And if they try to do that, it really can dip into the rest of their planning and derail the whole thing because they're so heavy in one idea or concept. And what I like to look at is a combination of both term and permanent life insurance, right? I think there's an appropriate blend to do there. One of the things that I like about permanent life insurance in these types of cases is that you are oftentimes looking to make sure that you need a guarantee that when you pass, there is going to be funds available for somebody with special needs, that you want to guarantee that those funds will be there, right? And that's what life insurance does. Yeah. Term doesn't necessarily do that so well because there is an end to the term, right? The permanent policies don't really carry that. So I've seen those be used quite effectively in special needs planning cases. And the other thing that I'll just highlight, and I just feel a moral obligation to say this whenever the topic comes up, right? Around the, infinite banking and be your own bank policies and all this. They're so wildly oversold. And you're absolutely right, Greg. The death benefit is the primary purpose of those policies. Everything else is just an added benefit, but it's so easy to overcommit to one idea. And if that doesn't pan out, it really, really can derail someone's financial plan with or without special needs considerations. Just really be careful about how much you're sinking into, permanent life insurance contracts, that it's being used in an appropriate manner, in relationship to the rest of your, financial plan, your cash flow statement, and your net worth, and all things are in alignment with that. Anyways, I have to always get that off my chest. I think TikTok and Instagram and all these places are so wild these days with people trying to sell everyone everything, and there's some really great products out there, financial products, but there's no product that's for everyone. So,
I think you hit it on the head. A lot of time, for, this is kind of, basic financial planning, but when you have younger kids or younger family, then you probably need some term to get to the $2 to $3 million that you probably need to provide for your family through adulthood, right? But when you're talking about planning to fund a special needs trust, right? Like when you die at 90, you do need that is where permanent insurance comes into play, and so. It's different tools for different needs. Yeah,
absolutely. So you have to have all the tools in the toolbox. And it sounds like what I'm gathering from this conversation today is that special needs planning is both not too far off from traditional financial planning or, in concept, but in implementation, there is some nuances that can make profound impacts. And you want to make sure that you get those right.